The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it was the day that everyone was waiting for, or the day that everyone was dreading. USDA data dump on Friday, the November WASDE report. Also, a backlog of daily flash sales data, all coming out at the same time on Friday morning. And the grain markets didn't really love all the data, with a negative reaction to finish out the week. Let's talk about this and get some perspective on the week in the market trade. Joining us now, Dwayne Bussey with Bolton Marketing. And Dwayne, good to talk with you again. Welcome back to the show. And wild end of the week with mostly a negative reaction in that grain and oilseed trade on Friday.
Yeah, it really was. Yeah, I don't like seeing the losses we had today, but I think so much of that is we were so bulled up going into this report. And man, I think we were all dreaming of bullish news and maybe a great grain robbery, which we didn't have, did we, when the data came out?
No, we did not. We did not. Let's talk about some of this WASDE data and just pull it up. I'll pull up the corn supply demand charts and, really minimal changes to yield, minimal changes to production for quartered soybeans in the U.S. And there was such a wide range of estimates heading into this report and all these unknowns. I mean, as you started to look through the numbers, Dwayne, anything stand out to you either way, good or bad, here on this report?
Well, I think like everyone else, I was disappointed the yield didn't come down more than it did. That 0.7 you have up there isn't much of a reduction, right? I still look at it and go, man, if we planted basically 99 million acres of corn, that means a lot of fringe areas got planted. Now, I farm in the fringe areas of Northeast South Dakota here, and I got to admit the corn yields were good. Where there was corn, we lost a little bit due to the drowned out. So I think it's a great corn yield, but man, I think that number can come down a ways yet, Jesse. And USDA did say a couple times in the reports that it was hard to gather all the data with the government shutdown. So I don't know if that's kind of here's the report, but things could change moving forward.
Yeah, very true. Well, and you look at some of the percentage changes for corn yield, to your point, could come down some more. I mean, not really big changes seen out there as you look across, on a state by state basis here, Dwayne.
Yeah, no, it really didn't. It looks like, records in the I states. So that would make sense. You need to have that if you're going to have a record national yield. North Dakota being down wasn't a shock to us. Soybeans are down even worse in North Dakota from a percent change from last month. Just too wet, too cold all year long, kind of pulled that market yield down there. So, but all of it in general, you take a bushel an acre off of Iowa, Illinois moving forward, that can really reduce the yield yet. I'm still down around a 181, and I think I'm going to stay there for now.
And you mentioned soybean yields as well, minimal changes there too. And just, unpacking all of this data, it's always interesting. You get the knee-jerk reaction, then you start to get the human element back into these markets a bit too. But really it felt like the cascade was just to the downside, and maybe some buy the rumor, sell the fact, that type of trade. I mean, just once that data hit the market, just didn't feel like the grains were, really apt to recover as we went through the rest of the session Friday.
No, and I think a lot of that is to a point you mentioned just before we went on the air. It's a Friday, and we were all jacked up and excited about this report. But from about 11:30 on, my day actually wasn't very busy in here, and I kind of told the guys, "No, I can't help on the farm. This is going to be a huge day. I'm going to be doing things, talking to people." And I think the funds sold out of positions they wanted to when they saw the data, the algos did. And then I think there was no one there to buy it off the dip here. And therefore we closed near the lows. And I think everyone just said, I don't want a new long position over the weekend. I want to sit and think about it. And I think when we come back next week, dust settles, I think we can grind higher again. I think there is a larger fund movement here out of like long cattle positions, out of metals and into the grains, which is kind of an inflation hedge, maybe. But we'll see. I mean, we got months to sort that out too.
That's a very good point. Well, also the other piece that kind of hit the markets right away at 11 a.m. was this backlog of export sales data, and I'll pull some of this up on our video feed. But I mean, as we kind of look through all of this, so corn sales to Mexico, some sales to South Korea, Bangladesh, a lot of unknown. Soybeans to
Mhm.
China, only about
Yeah.
132,000 metric tons. So
Mhm.
all that data flooding the market. What's your take on some of that, Dwayne?
I think that's actually why the markets were down is these sales flashes were disappointing. Now this is different, right? We've had a lot of USDA reports every month, and we know what to expect when to come out. This when they announced yesterday that these flash sales were all going to be released at one time, and of course at 11 o'clock during the USDA report, we didn't know what to expect. Like I had to quickly kind of sit down and do some math of like, well, what's a good number, what's a bad number, and I got to tell you, when you add these up, they look like a lot of sales, don't they? But it's a little disappointing compared to like a year prior. And when you talk about the big unknown, China, was China out there buying? Well, if they were, they weren't doing it in big time flash sales. Yet you're right. I see them up there on the board a few times, but it's only like you said, a million or 1.0, or it's even like 0.8 million metric ton. I think we really need to see China closer to like 3.0 million metric ton to really get this market excited. Back to the U.S. report, they lowered soybean export demand by 50 million bushels. And I think the trade's big time disappointed in that. And I am too, a little bit of like, yeah, we're all starting to wonder, is China really going to buy or not? And, we did right from day one. I think they need some of our beans before Brazil's harvest, but surprise, surprise, Jesse, this comes down to supply and demand again. And if we're more expensive than Brazil, they won't buy from us. So that's really, which I'm being a total geek and econ 101 major. It seems like I like that it comes down to supply and demand. So that's okay, I guess.
You mentioned wheat to me before we jumped on air. We're kind of talking corn and beans predominantly here, but what about wheat?
Mhm.
Tough down day there post report as you look at the numbers from the WASD and more. You mentioned to me it didn't feel like a very good day for the wheat complex on Friday.
No,
What's your thoughts?
no, it was kind of a horrible day for wheat, which I don't know what I expected, because I did expect the Indian stocks to increase a little bit for wheat, but I didn't expect it to increase that much, and I think we're going to be disappointed moving forward as the Argentina crop gets even bigger for wheat crop, the Australian crop gets bigger. So world supplies of wheat grew a little bit here today, and the funny thing is they're not horribly burdensome, but wheat is just going to be a follower of corn and soybeans if it's going to go higher this winter. So I think wheat, if you want to be bullish, and everyone kind of does because this price doesn't work. So there's a lot of wheat stored in the bin, especially spring wheat in North Dakota. I'm okay to still hold it, but you got to hope for something else to help you to rally higher this winter.
So, risk management wise, across this grain and oilseed trade, before we jump over and talk livestock, I mean, what's your thought process now coming out of this report? We got Thanksgiving coming
Mhm.
up here right around the corner, Christmas time, and these markets tend to get very quiet. Folks get busy
Yeah.
for the holidays. I mean, where do we go from here? And I wonder as well, how important does the December WASD report become?
Yeah.
Or does USDA kick the can down the road to January like they typically do? I think there's a few question marks here ahead of us, Dwayne.
I think there's some big question marks. And, from a risk management standpoint, what a lot of producers are faced with right now is, hey, I took X amount of bushels to town. Do I pay for storage or not? That's a very popular question this time of year. And I think now with today's report, I really got to question whether we should hold them or not. Now, I want to give it to Monday. I want to see if we can get the funds back in rebounding this quickly. If we can get corn back about the 200 day, then I think we could have a whole nother conversation about where you're good to hold. But if this market struggles Monday and Tuesday, and we can't get back to where we were today at the highs, then I think, to your point, we got to remember that this market can get kind of boring moving forward. So the rally might not be enough to pay for storage costs, to pay interest costs, things like that. So if that is the case early next week, you see a sluggish grain market, I think then you might have to let that stuff go. And if you want to buy it back with some courage calls, or it wouldn't be courage calls, just straight out calls for March, I think that's fine. So let's see what the market acts Monday and Tuesday, and kind of go from there.
Folks need to be looking at their D's 26 and no 26 quart of beans here potentially as well, Dwayne.
I'm not looking at the corn yet, even though I wouldn't stop somebody. But we were selling a little bit of new crop beans going into this report today, and I think you can look at it early next week as well too. Remember, soybean market, we're at what, a 17-month high here, and if you look at November new crop, we're above $11, a price that everyone would point out I wasn't that high all year this year with sales. So it's not a bad place to get started. I do look for next year for our corn acres to dip quite a bit and soybean acres increase. And we already know Brazil's acres are increasing. So honestly, if you don't have a weather problem in South America or the US next year, the soybean situation could be much worse a year from now. But there's a lot of weather between now and then, I hope.
Yeah, well, and to your point about Brazil, Argentina, minimal changes from USDA on this report as well there. I mean, some adjustments to 24-25 production, but really nothing to new crop production. I think time will tell on South America, Dwayne.
Absolutely. And that's the weather market now, is watching them moving forward here. We kind of know our general supply. I've already pointed out, I think it could be lower a little bit for both corn and soybeans, but that won't change probably till January. So now we're going to watch weather down there and watch it close. There's a few dry areas in Mato Grosso or Brazil, but for the most part, looking pretty good right now. So yeah, keep an eye on that moving forward.
Dwayne Bussey with Bolt Marketing joining us here today on Market Talk. Let's go to livestock. And Dwayne, fairly mixed to higher day in cattle and hogs. The WASDE report does give us some numbers on beef production, pork production, et cetera. And really, it was less than supportive, I think, across both. We saw beef production for 2025 fall by 70 million pounds from the September report. Pork production fell by 80 million pounds from the September report. So just have to wonder if some of those numbers and a volatile week, maybe some consolidation, just all that. I wonder if that underpinned some of this protein trade on Friday, Dwayne.
Yeah, it sure could have. I think the USDA report for meat at least is going to help the bulls point out what they're telling me every week when I mention I'm bearish. The supply hasn't changed, and they're right. It is a tight supply that you can't change it overnight in cattle and in hogs either. So that point's there. But I think what we've got here, what we had here, we were limit up on Monday, right? And then we didn't have follow through buying on Tuesday, and the trade really looked at that as a disappointing trade for the bulls, and the bears stepped back in here and sold it hard. And when the bears are selling it hard, to me, it's funds getting out of long positions. They've heard President Trump loud and clear. He wants beef prices lower. At the close today, he made some sort of statement about signing some sort of agreement that will lower tariffs on beef, but no specifics here yet. So really bad reporting on my part. Sorry. But so it'll be probably from some small countries that really don't make a difference and don't change the supply. But the funds don't want to be long, Jesse. That's the thing we need to hammer home here. They've heard him talk. They've heard his administration. We're worried about the Mexican border being open. But if none of that happens over the weekend, Jesse, Mexican border doesn't get reopened, we don't drop the tariffs on Brazilian beef, I think we can have a recovery early next week in the cattle complex. But I'm going to sell that recovery just like I do the other ones for hedgers, because I just think funds have got more positions to get out of here yet.
And I'll help you hammer that point home here, Dwayne. I mean, we've just seen all this volatility, and it's felt like funds just rushing for the exit here in this cattle market, because to your point, they're scared of what's ahead of us. They're scared of the unknown, and it just seems like they'd rather put some of that money, park it on the sideline, or put it into other areas, commodities, grains, things like that. They'd rather do that than stay in this cattle market with all the unknowns that are out there right now.
Yeah, markets don't like uncertainty. And we have to remember, when it comes to the livestock market, how long the funds were and what percent of the open interest they were. I think they were 53, 55% at one point in time. So when they want out, the market will crash. Now, of course, now all of us producers are going to hate the funds, right? But we have to remember they help push this market this high too. And please go take a look at a chart. I got so many guys tell me, well, it can't go down anymore. I'm like, You look at a continuous chart, it's got a long ways it can still go down. And there's nothing wrong with $280 feeders if that's where we're going to go drop back to. I mean, essentially, that's kind of where the upward trend line is. So it's still a very good price. I remember when we got above 240, we thought we had something going on here. And now it seems like we're going to cry if it's under $300.
It's one of those things where, again, it just comes back to managing your risk as best as you can with whatever market we are looking at. And, too, I mean, the outside markets at play here a bit as well with influence. I mean, crude was volatile Friday. There's talk now that a rate cut in December, it's a 50-50 chance here potentially now. A lot of smart folks are saying that on Wall Street. So, I mean, you got the whole outside market picture as well that can play an influence here in the grain and livestock trade, Dwayne.
Oh, all the time. And the headlines, because the algos love trading the headlines, right, and move it all over the place. So, and they move it before we can even think about it. So you're right. Yeah, stock market was down pretty hard yesterday. It probably had partially what to do with the livestock going down hard. And we opened down hard, but had a nice recovery today. But, kind of the opposite of the grains. I think no one wanted to go short another contract into the weekend. So I think everyone needs a weekend. I think we can just shut the screens off now, come back Monday, and let maybe smarter heads come in here and trade this market.
Well, with that in mind, we shut things off for a few days and get back to trading on Monday. What would you leave folks with, or what would you reiterate to them as maybe they take a breather and then get back to looking at things here as we get into the new week?
Yeah, I always like to say go back and look at your spreadsheet, your profit and loss on your farm, like especially those stored bushels. We can own them back probably a cheaper way than commercial storage, but I am still bullish. I think corn and soybeans have something here. This trade action up till 11 o'clock today looked really, really impressive. And China, if you're out there, soybeans got a little bit cheaper here today. So I wouldn't be surprised to see them step in and start buying from us, because I don't think they really want to go back to a trade war with Trump either.
Dwayne, always appreciate the insight. If folks want to reach out, talk with you there at Bolt Marketing, what's the best way?
Yeah, they can call us here directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
Dwayne Bussey, Bolt Marketing, always good to talk with you, my friend. Thanks for joining us here on Market Talk. Have a good one. We'll talk to you again soon.
Sounds good. Thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.